All right, good morning, everyone. Welcome to Daily Rates Live with the Mortgage Calculator. Today, we're going to go over our live mortgage rates, and then we're going to be talking about SBA loans. Give us just a moment here to go live on all the different platforms. Definitely appreciate everybody tuning in nice and early. Go ahead and drop a comment there in the chat as you tune in. We definitely appreciate it. Happy Friday, everyone. Great topic here for today to go over. So with that being said, looks like we're live on all the platforms. We'll go ahead and get it started. We'll take the chat off the screen for now, but go ahead and keep dropping comments there in the chat. You can also drop any questions you have in the chat as well, and we'll answer them after the presentation on SBA loans. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our CSO, Jose Gonzalez. We are a lender that specializes in non-QM loans, and what we do every weekday at 11 a.m. Eastern on this show is go through our live mortgage rates. Then we do a deep dive into a different loan type. And today's loan type is going to be small business administration loans. Definitely some very interesting programs here that Jose will take us through. But first, we'll check out our rates for our standard program. So, Nick, if you're ready, let's go ahead and pull up our live rates and see what they're looking like today for the standard programs.
All right. So definitely still good for rates, still at all-time lows, and our non-QM programs have updated as well, which they take a few days longer than the standard. So we'll compare all of our programs here for today. It is September 13th, just after 11 a.m. Eastern, so all our initial rate sheets are live for the morning here for the standard programs. And we will compare the APR. If you'd like a full breakdown and itemized loan estimate of all the fees that go into the APR, please get with one of our team members. They'd be happy to help you out. For the demo, we set up a standard scenario, single family home, 500,000 purchase, 400,000 loan amount. That corresponds to 80% loan to value, 20% down payment. Use an estimated 760 FICO for all these demos and an estimated 40% debt to income ratio. So let's check out the rates today. All right, so first up is our 30-year fixed conventional for primary home. That's the typical option most people think of when they think of a mortgage. Rates as low as 5.625, final APR 5.915, so right about the same as it was yesterday. And if for any reason our customer doesn't qualify for a conventional option, the next option we typically want to present is an FHA option. FHA allows more leniency on credit issues as well as a higher debt to income ratio, but does require upfront and yearly mortgage insurance. FHA coming in today, 4.875, amazing. Final APR 5.805. So if our customer qualifies for both, they may consider FHA if they're willing to do that mortgage insurance. And our customers that need to use it, definitely a great option. And moving on to our VA for our eligible vets and active service members. If you are eligible, these programs are definitely the best options typically. Rates as low as 4.99, final APR 5.275. So if our customer is comparing across the different programs, the VA is obviously going to be the cheapest for the APR. So definitely a great option for our vets and service members. And the final standard option, USDA, is only for USDA eligible areas of the country, the rural areas. If the property is eligible and the borrower is eligible, these are great options to consider. USDA coming in today, 4.875, final APR 5.586. So if we're comparing our customer to FHA, the USDA is going to be a better option if it's eligible and a better option than conventional when we compare the APRs. So definitely consider that if you're shopping in those areas. And that rounds out all of our standard options that any bank or lender has. But if our customer doesn't qualify, most banks or lenders have to deny them. But we have 5,000 other options, starting here with our 30-year fixed, non-QM, alt-doc version for a primary. So typically someone doesn't qualify for a conventional option, 2 years of tax returns. They need to switch to using alternative docs, bank statements, 1099s, P&Ls, etc. We have all kinds of options. This option here, again, non-QM just went down a little bit. It takes a couple days, so this is amazing. Our bank statement option today coming in at 6.00, amazing. And final APR 6.309. So as usual, as the non-QM went down, now we're well within a half a point of conventional. And you see that non-QM still tracks within about a half a point there. So great option that we can give to our borrowers that need it. And our non-QM options for investments, definitely a lot of flexibility once we start getting into investment properties. So non-QM options such as bank statements coming in at 6.5 rate, final APR 6.823. And we'll compare that to the other investment options. There are no government options, so no USDA, VA, or FHA, but we do have conventional rates as low as 6.25 for an investment property with conventional. Final APR 6.581. Great option there, but we always recommend our customers to check out our favorite programs, and it's still beating conventional, which is tough, but it's still squeaking by a little bit there for our DSCR option. DSCR stands for debt service coverage ratio. No employment information needed, no income information needed. We simply use estimated rents from the appraisal to determine a DSCR value. The estimated rents can cover the estimated expenses, aka the property cash flows. That's a DSCR ratio of 1 or higher, which is preferred. For the demo, we always use 1.5 so we can see all the programs. And the first up is our 3-year prepayment penalty option, which is the most standard option. Rates coming in today, 6.25, final APR 6.516, so right about the same as conventional, which is amazing. Still say most investors will choose a DSCR, even at a much higher cost, and today they're almost identical. But we can sweeten the deal with our 5-year prepayment penalty. Rates dropped on this quite a bit. It's been quite some time since we've seen DSCR in the 5, so this is amazing. 30-year fixed DSCR 80 LTV is what we're at here too, by the way. 5-year prepay coming in under 6, 5.875. Amazing. Final APR 6.181. Smoking conventional still with a 5-year prepay for DSCR. Absolutely amazing. And the final option is a DSCR with no prepayment penalty, as some states do not allow it, and some investors don't want a prepayment penalty. Rates today for that option 6.5. Final APR 6.823. So that's a touch higher than conventional, with no prepayment penalty. So usually recommend our investors to add a prepayment if they would like. But typically most investors will still choose this option over conventional, as no employment or income docs are needed. So definitely an easier program. And the final 2 options, new programs that we have here are 30-year fixed second mortgages. So a lot of customers still have a low rate first mortgage, even though rates are great today. Many customers still have lower rates than what we can offer today. So they want to get cash out without touching the first mortgage. So we can use a HELOC, which is a traditional, or we have our new 30-year fixed second mortgages. For a primary home, we can get cash out with that second mortgage, rates as low as 8.125, final APR 8.527. And these are not HELOCs, so the rates are much better, and they're not adjustable, which is definitely better for most borrowers. And we can use the same program for investment properties. HELOCs are very rare for investment properties, so great option here. Rates as low as 9.5, final APR 9.769 for investors to get cash out using a fixed rate second mortgage. And these are both non-QM programs. We can use bank statements and similar. Let's get into today's topic. We love doing these deep dives because we can't pull live pricing for SBA loans, unfortunately. These are kind of case by case. SBA loans are also somewhat of a variable rate. They're adjustable, so they adjust with the market here. So you see Jose has to pull new rates every time we do this show, as the SBA typically tracks with the prime rate or similar. So Jose, let's explain what we can use these for real quick, and then let's check out today's options. And again, since it's adjustable, they adjust quite frequently here. So,
all right, good morning, everybody. Thank you for joining us for Daily Mortgage Rates Live with the Mortgage Calculator. SBA stands for Small Business Administration. Right. One thing that I want to get clear here also, SBA is only for U.S. citizens and permanent resident aliens. You have to have 100% legal status in the U.S. to be able to benefit from a small business administration loan. Now, what I can say is that SBA can be for real estate, or it can be for leaseholds, right? You can be a restaurant operator, but not the owner of the actual real estate, and use an SBA loan to purchase the business or expand the business. So without further ado, let me go and share the options I have so I can break it down. As Nick was mentioning, SBA is also based on a variable rate, right? It's based on the prime rate plus a margin. Margin can be anywhere from 1 to 3 points, depending on the risk associated with the transaction, and also depending on what the borrower negotiates with their lender. So in this scenario here, SBA first scenario, which I think is a great scenario, many people may not be aware that SBA will actually finance 100% of your purchase. This is for scenarios where an existing business, been in existence at least 2 years, currently occupies a space, not necessarily the space that they're buying, but they currently occupy a space as a rental, and now they want to buy a space for the business. So when transitioning from a rental to an owned space, 100% financing of the transaction is possible. Please do be aware that SBA loans are always full doc, and the owner has to occupy at least 50.01% of the space. So here you're looking at 10.75 as the rate, but I do state that rate can be anywhere from 9.75 to 11.75 because it is a variable rate. And our next option is the more traditional 90% LTV option, right? This is either scenarios where the business is either new or does not currently rent the space for an existing business. So this one, 90% LTV is the max, right? We got here 10.5. And again, that's variable rate. That could be anywhere from 9.5 to 11.5. Main thing to note here is the structure of the deals. So now this is what I mentioned to you, SBA business expansion or leasehold improvements, right? This is the one a lot of people aren't aware that you can do. Great option. Now, it's not going to be a 30-year term on these loans. They're usually going to be something like 20 years, right? But it is a great way to grow your business. And they do lend up to 90%, right? So, but in the case where there isn't real estate, they're just going to value the business. And last option here we have, you can actually refinance your existing SBA debt, right? So the term can be as short as 10 years if no real estate debt is involved. So, real estate, is involved. Business debt that is in good standing can be refinanced as long as the business's cash flow is being improved. Something also to note here, no minimum credit score. They're going to underwrite, and this is the same with all the SBA options. There's no minimum credit score. They're going to underwrite the total risk of the transaction and then realize, see what they can do. So the term on this is as short as 10 years if no real estate is involved, to as long as 25 years if real estate is involved. So definitely look to the mortgage calculator for your SBA loans, commercial loans, as well as all the great non-QM and agency options that we offer.
All right. I do not see any questions here, but definitely some amazing programs there from the SBA. Great tools to have in your tool belt there. So still no questions. We'll go ahead and wrap it up. Remember that we do this at 11 a.m. Eastern every weekday, where we go through our live rates and then do a deep dive into a different loan type. So we will see you all next week with some new topics for the next episode of Daily Rates Live with the Mortgage Calculator.